Louise Vedved here, your host of the Mind Over Market segment. This is how traders think, and I am joined by Jordan Miller. How are you going, Jordan?
I'm well. I'm well, Louise. How are you?
That's good. Look, thank you for letting me absolutely gruel you with all of the things that you can possibly do to not only improve your mindset, but also to sculpt mental clarity, because that is the goal. So, today we have got a fascinating topic. I think you're going to love it. It is how to trade like a moron. Now, we know with comparison studies, there are upward and downward comparisons that we can make. Often people put FOMO into a complete, I must avoid this type of
Mm,
category. However, we know from the psychology studies we shouldn't try to do that. We should actually see where it fits into our life. So if we make an upward comparison, it's aspirational. There's a mentor ahead of us. It's somebody that can encourage us perhaps as well in our journey, and it's somewhere where we want to be. If we make a downward comparison, we're saying to ourselves that, wow, I'm so clever. I'm glad I didn't end up like them. Oh, weren't they unpleasant
mm.
expletive here? So I think that we need to be aware of where we're at with that. And it is really good with this to make downward comparisons to see who is a moron that we don't want to emulate, so that we don't have those behaviors creeping into our own trading. So how does that sound for a topic, Jordan?
Let's do it. Let's do it. How to trade like a moron. I reckon I've got a few cents to add here.
Fantastic. Now, just before we do kick off on the topic for today, I didn't quite finish about my new book. So, my
Mm,
new book that's joined the other 5 books in my catalogue here is, of course, my new Investing Psychology Secrets. So, there was a little bit extra that I wanted to talk about the things that ended up on the cutting room floor. And you can get that new book from tradinggame.com.au. I have it available now. Technically, it's not quite ready for release, but hey, I'm sure between you and me, Jordan, I can get a few extra copies here. Now, I wanted to talk about the things that got left on the cutting room floor to finish off that as a topic. And one of them was what happens when you make a huge profit. Now, I don't know, have you seen the movie Pretty Woman, Jordan?
I have.
So you'll know that Julia Roberts' character had perhaps a very endearing character to play, where she was
Hmm.
a sex worker, and eventually that Pygmalion effect, she was transported into the world of luxury and respectability. So she went into a shop initially wearing perhaps appropriate clothing for her profession, her initial profession, and this woman didn't serve her. So this woman, she basically made a big assumption about how Julia Roberts looked, and she decided to write her off. When Julia Roberts got the nice clothes and the nice man and the nice handbags and the nice shoes and the nice hat, apparently, because that must have been in fashion, she went back to that woman and she said, "Do you work on commission?" And the woman said, "Yes." And she said, "Big mistake, big, huge." Now, for those of us who have ever wanted to insult a brother in law, or perhaps somebody who didn't believe in us, or maybe even an ex girlfriend, that scene is a classic. So, what does it have to do with trading? Sometimes with trading, we make a huge profit, a huge profit, something that makes you sweat because it's so huge, something that either, and it can go one of two ways, we run around woo, 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 practically throwing money onto the bed and making snow angels. Or we suddenly get very insular and don't want to speak to anybody, and we shrink into ourselves. So I was talking to Linda Bradford Rashke about this. Linda Bradford Rashke is now Linda Rashke. So if you've read the Market Wizards books, I'm talking about the same person. So Linda Rashke said for her first trade where she made 7 figures, everything suddenly jumped into sparkling brilliance. She was driving her daughter to karate, the trees were greener, the sky was bluer, the birds were singing, and she was just euphoric. Now, I think a lot of us want to recreate that after we've had a big hit like that. Tell
Hmm.
me, Jordan, when you've made a big profit on the markets, what does your body do? What do you feel inside you?
I'm one of the ones that shrinks a little bit. I when I've done some numbers that I've done before, it's more of a I don't know how to explain this. I guess it's a it can't be true type thing. Less euphoric and something's not right. I guess
Yes.
in that, and then yeah, I tend to not tell anyone. I've done a lot of searching on ego, not getting ahead of yourself and stuff like that. So I really suppress it down and be like, no, was this part of the plan? Is this part of the plan? Carry on as usual. This could happen the other way tomorrow.
I totally understand, and it is something that is nice to premeditate because it can give you a guidance, but until you're in that situation, you'll never really know. So, for me, I had a profit where I earned more than my final salary as a national sales manager in the
Mm.
one trade over a period of a few days. And it you would think that would be a good thing, but it deeply unsettled me. It deeply unsettled me. So, having a huge profit is something that I'd like to discuss today. I do think it's a topic that if you haven't had the huge profit yet, then you will be down the track getting that huge profit. So, let's think about how to handle that in advance. So, I'm going to call this the huge profit solution, and it is involving the morning journal. So, for us to just have a quick refresher on the morning journal is where you write down your thoughts, you keep your pen moving, and you really don't critique yourself in terms of, oh, I shouldn't be writing that. You just let your subconscious flow. So, I have got a way for us to be able to handle a huge profit and to be able to process that through our system. So, the first day, you fully express what you're feeling in words. So, write it all down exactly how you're feeling. On the second day, reflect on what did you do well in the situation, but also consider if you're given that chance again in the future, what would you do differently? So, what did I do well and what would I do differently? Because in every single trade, we need to consider how can we improve. And that includes a huge profit because it could have been that the market conditions were incredibly favorable and it was very little
Mm.
to do with your own brilliance.
Yeah.
So, if that huge profit has come from you following your trading plan and you being diligent with your discipline, then you do deserve those rewards. You do. If it has come from a mistake, a freak market accident, a situation where you cannot replicate it, you're going to need to journal even more because that is going to be something that can mess with you. So, those first two steps, Jordan, give me your impressions. So, expressing yourself and then thinking about what did I do well and what would I do differently in your journal.
Yeah, absolutely. So two things. First and foremost, most people will have a bit of trouble expressing themselves, right? They'll have a bit of trouble in how to really get that out and how to put it on paper. So my number one advice is that you a little bit just write. Just don't think, just literally just write and it will come. It will come eventually. Just write what's coming into your mind and keep it going, keep it going. You will get little golden nuggets in what you've written down and you'll be able to narrow it down and learn a little bit more. The review, so important. The review is so important. Understand whether or not this was something you've done or this is something that the market's done. And then in the event that it didn't happen or it did happen, what would you have done differently? Even in losses, in wins, I think it's always important to fully understand what's happened in order for you to get that money.
I love that because I do think as well It is interesting because on day 3, I'm going to suggest that you continue to dive into your emotions. So, whether it be elation or perhaps that shrinking feeling that we were talking about, that you describe any remnants of those feelings. So, don't re describe what you've just described in day 1. Go into additional areas. Try to be really disciplined that you just don't keep on going the same thing again and again and again, because that's not going to be where the learning is. Often on day 3, coming underneath that initial top scent, as the fragrance manufacturers in France would tell you, of a perfume, that underneath area, that underneath your area of subconscious, that can be where the true insights come from. So, describing any additional feelings on day 3 and day 4. This sounds like I'm being really mean, and this is why they rejected it. Okay, I'm giving you the answer.
Let's go.
Challenge yourself to explore that the whole thing could have been luck. That this was nothing to do with you. That you are not a market wizard, you are not a market god, that everything that happened was a fluke. Now, what we're trying to do is we're trying to force growth, okay? So some of this stuff that we're doing, even in these shows, Jordan, I'm aware that I make you uncomfortable. I really am, and I get that. But in order to force growth, we must be prepared to accept discomfort. So the editor decided in his infinite wisdom that this is too cruel to get people to do, that they should sit back and enjoy and stop questioning because, hey, you're traders and sometimes good things happen. But I went up against him and I said, no, if we don't put day 4 in there, then I'm not interested. So Jordan, give me your thoughts. I am harsh. I do expect people to punish themselves to grow, but I think if we don't do that to ourselves, then we're missing a good opportunity because we want to duplicate this into the future. And if we don't grow from this, then we're not improving ourselves.
Yeah. What's the old saying? Smooth seas don't make good sailors. Is that the old saying, right?
I like that.
You've hit the nail on the head. You're not going to grow if you're not uncomfortable, if you're not challenged. And when you're in trading, you're on your own. Unless you're trading on a big trading desk and you've got people looking down or mentors breathing down your neck, being like, "Hey, what are you doing?" It's likely you're on your own. No one else is going to put in the hard work, and that's that. And I'm a big fan of it. When things happen, how much was luck? How much was skill? If you're feeling good about it, that's awesome. That's awesome. But is it a direct correlation to something that you've actively done, or is it just gone in your way? And it's very important to understand that. I'm all for it. I've been told I'm too hard on myself sometimes, right? So I'm that guy that goes in and be like, no, this isn't a result of X, Y, Z. This is a result of this. So no, big fan, big fan. You got to challenge yourself. You got to grow. It's why I still come back to these shows, Louise. I know you put me on the spot. Talk about some emotional things, talk about some things that I haven't ever spoken about before. And I do it on a camera for everyone to see, but I do it because I'm growing and I'm learning. And that's the only way you do. Get uncomfortable, grow, learn.
Yep, absolutely. And in some ways, this book has helped me work out what is it that I'm willing to die for, because that is the other aspect that they blocked out of the book. To prioritize, we can't just prioritize based on airy-fairiness and niceness. We actually have to work out the opposite of that as well. And it was related to this day 4. What are you willing to die for? What is the thing that you are going to say enough? Where is your line? Where is your boundary? And this is an aspect that I'm so happy that we can explore. And I've got a little method for you after we finish this few days to resolve and recover after a huge profit. Day 5. Imagine that it's 5 years from now and reflect on that profit. Did that profit make a difference in your life? Or was it just one data point amongst many? Did it represent a turning point? Is it something that you could alter because that profit came into your life, and examine it from the view of your future self. What does your future self say looking back on that profit now? And day 6 is review those previous days of journaling. So I am a big believer in future self. I'm a big believer in us working out who we want to be and then step laddering our way into that future person. And I think that can be interesting when we are faced with a huge profit, because we need to learn. We need to learn from this. It's your losses teach you, but your profits teach you as well. Your thoughts, Jordan?
Yeah, every little bit of data you can get in trading teaches you something. We shouldn't just walk away like profits. My job here is done. Awesome. And not look at it and then only analyze when we're losing. Every single data point, little things that you probably don't even think of, matter if you want to improve and you want to grow as a trader. So, absolutely, I agree.
Yeah, interesting. So I do have a technique as well that can, I think, assist. Now, it is a bit of a weird one, but I use this with my sister. Okay. Now, I've got 3 sisters, so I won't mention this sister's name. And I find sometimes, a lot of the time, she's quite sarcastic and cutting, and she's so clever and she's so smart and she has got an amazing career, but her words damage my tender heart. So I imagine I have a bubble around me, and so I stretch out my arms and I say, okay, there's my bubble. I can almost feel it. I can almost see it. I visualize it to such an extent. It's all around me. And I imagine her words hitting that bubble and then bouncing off so that they can't actually penetrate to my soft tenderness. Now, having that same bubble view when you've hit a big profit or a big loss, okay, that big profit or loss is outside the bubble. What's happening inside the bubble for you now? And a lot of the time when you and I are talking, I'm trying to get into your bubble, into your inner thoughts and feelings, not that which has happened to us. And this is, I think, a big part of being a trader, is working out how to make money and how to live with that. Yes.
Strange concept, right?
Yes.
Strange thing to say.
Yeah, I wouldn't think it'd be a problem. That's the editor as well. That was his thought, is that why is this an issue for traders? This is not going to sell a book. Goodness me, mate, you haven't been in the markets. All right. So other than my editor perhaps scrapping those things and wounding me deeply, I want to cover, let's look at trading like a moron, and let's look at the things that people who don't trade well tend to do. And we'll go through some of these fairly quickly. The first one is not having a stop loss. So not having a stop loss is just ridiculous. You have to know when you're going to get out of a trade before you get in. Now, this is a core concept, and if you're winging it, if you're imagining that you can guess and you can do this on gut feel, then you are in trouble. You've got something else coming for you. And another one is over trading. Now, there is a lot of research by Brad Barber and Terence O'Dean that talks about returns, and they talk about if you overtrade, you earn less. Now, what does overtrading look like? It usually looks like a beginner to intermediate trader who happens to be male, because I'm just stereotyping here because I'm basing it on the research. I'm not picking on anyone in particular. And it's somebody as well who has got that I can't control my testosterone aspect. I can't calm myself down. I can't take a little bit of a breather. I don't know my recovery methods. So they're the types of issues that I think can lead to overtrading. So I'd love your thoughts about how to trade like a moron. First 2, no stop loss and overtrading. Jordan, do you find in your information, does that replicate?
Yep, stop loss, not just knowing or thinking of an area where you're going to get out. It's always good to always have an order there as well, just because you never know what the market can print. But you got to have a stop loss. You got to know what you're willing to risk. You got to know what you're willing to lose. You've got to know how much it's going to hurt when it does go the other way, right? Over trading, absolutely. Go back to last episode. Hug yourself, calm your heart down, right? Ground yourself, touch. Absolutely. Over trading is a big one, especially I find in a lot of beginners. If they go on a bit of a hot streak, if they've won 2 or 3 trades in the same day, they're thinking, oh, this is never going to end. And they just continue to go and go and go. And we all know how that ends up.
That's it. Now, some other areas. Trading from gut feel, saying that you think you have got a feeling in your waters that this is going to be the big one. Unless you have been an exceptionally well-trained, long-term in terms of the longevity in the markets trader, you will not have developed a gut feel. What you were talking about is magical thinking, something that you are hoping, wishing, praying that buy, hold, pray, BHP concept, it has got no grounding in reality. So trading on gut feel. So get that out of your vernacular. Stop talking about, I had a good feeling about this one. Stop saying, I was pretty sure it would work. Look at your language, hone your language, make sure that your language is specific because that can determine your future. And the other one is no trading plan. Now, my goodness me, I am shocked by the number of people who do not have a written trading plan. Jordan, your thoughts on gut feel and no trading plan?
Yep, gut feel is tough, especially if you're a discretionary trader, right? Because it's something you're reveling with. It's something, is this a position? Is it not? Gut feeling was actually something that I journaled for a long time. I would explain why I have a gut feeling or what that feeling is when I'm entering the trade. And then I would review after 100, 200 trades, be like, well, hang on a minute. Every time I've felt really, really good about a trade, it's lost. Why is that the case? So I think it's something you can also analyze and have a look into. We had a trader last week on stream say, I guarantee this is going to turn. And it's fair to say that we ripped in. We ripped in, right? Because you that was just
pearls moment.
that's not in trading. You can't be saying things like that. You can't be thinking things like that. And then trading plan, it's a business plan. It's the foundation to achieving what you're setting out to achieve. Plan, you've got to plan in everything. Whether you're a football coach, like you plan. Whether you're going through university, you plan what you're going to do. Whether it's building your career, working in a job, starting a business, everything. You need a plan. What to do, what goes wrong, where are you heading. Same with trading, right? Whether it's really in depth into exactly how you're going to get in positions, all the way out to what are the targets you need to hit in the next year, in the next 3 years, in the next 5 years to get to your goals. You've got to have a plan.
You really do. I love what you're saying here. You are definitely preaching to the choir. Now, another aspect is not understanding position sizing. This is such a key. You can take a fully back-tested system, change the position sizing, and end up with completely different results. Now, it is to such an extent that if you don't believe me, you're going to have to put some effort in to understand. A little bit of time with an Excel spreadsheet and it will do absolute wonders. If you're not fully familiar with stop placement, and if you have a lower stop that you can buy fewer shares but risk the same amount, compared if you have a higher stop, which means you can buy more shares but risk the same amount, then something's wrong here. You have not done the right thing by your own education. So not understanding position sizing and also reading the news. Yes, I'm going to get some flack over this, I know. I understand there are fundamental traders. I do. I really, really do. And I'm probably talking to one right now. But Jordan, I used to write for newspapers. So you might know that I've been around for a very, very long time. So what I used to do with the newspapers, because they were on such tight deadlines, is they would say, well, tell us how much, I'll just use BHP, tell us how much BHP is going up tomorrow, write an article about it, and we'll put it in the newspaper. I don't know how much BHP is going up. It could go down. So I used to write the same article, exactly the same article, and say BHP has gone up by amount because you had to fill it in at the last minute. And the reasons for this are and then I'd say BHP has gone down by this amount, and the reasons are this, this, and this. And they were the same reasons with the same article, and the news did nothing. Now, I was a part of the news, I admit it, but I can guarantee you that would not have helped people make good trading decisions. Make sure people are putting their money where their mouth is, make sure they're actually looking at a chart before they're deciding on a position so that you're backing your information on fact, not hearsay and rumour. Jordan, you can rip me a new one about that.
Yeah,
Go for it.
I can imagine all of our chats sitting there going, I wonder how Jordan's going to respond to this, right? Because I am a fundamental trader. I do like basing my analysis, but here's the difference, okay? The data is what I care about, right? Not the opinion, not the writer, not the opinion. I care about the data. So especially in FX, where we're looking at economies, while they can be revised, I'm looking at GDP prints, right? I'm not looking at what a certain person's opinion is on that GDP print. I'm looking for the data, what the actual news is, and I'm drawing my conclusions based on those data trends, very much like how we look at price action and based on those trends. So when you say read the news, I kind of agree if you're reading opinions, right? I don't think, and it's also very important, something that stuck with me all of my life. My history teacher from year 10, I think, told me, always question incentive bias. So whenever you read an article, whenever you have a source, whenever it might be, what's in it for them to tell you and what's in it for them? What way do they want you to think? So I've always taken that forward. And whenever I'm reading articles on certain stocks, certain currencies, certain seasonal pattern, whatever it might be, I want 4 or 5 different opinions. And if I can't find anyone challenging that opinion, I've got a red flag. I'll be the one that goes to challenge the opinion. So I disagree with reading the news, right? I like understanding the data, but I agree with the element that you're going with, hey, the actual articles might not help you. The data, I believe, will help you.
I love that. I'm definitely a data person, following the data and also following the money trail. So what you're talking about with incentive bias, I think one of the easiest ways is to work out who is going to make money out of this if this comes to fruition, because that will load and stack the odds of you being able to understand why is this here in front of me. There are so many pieces of evidence that you can use to say, if I had followed the money, then it would have been revealed that somebody has a nefarious purpose. So yeah. All right, we might have to agree to disagree, but I think we're both saying the same thing.
I think we're saying the same thing in different ways. I think we're saying the same thing in
are.
different ways.
Yes.
I think the news is the key word, right?
Yes.
Whereas data, news is
yes.
based on data. Like
That's it.
so,
it.
yeah.
Now, another aspect that I think people who trade like morons ignore is ignoring the importance of psychological fitness. Now, this has got to be, I think, one of the largest. I'm not just saying that because I'm running the Mind Over Market segment for you, Jordan. I'm actually saying this because until you get started with trading, you think, how hard can this be? I personally thought, what are all these people talking about? And I've got a psychology background before I started actually trading. So I think that this is something that Jordan and I feel very strongly about. Now, I wanted to wrap up by just giving a couple of thoughts here. And Jordan, I'd love your impressions. I have very much been one to try and distill core concepts. And the core concepts that I can see, and Jordan, you can definitely debate, if it's going up, buy it. If it's going down, sell it. And keep your position sizes small. Now, those 3 things tend to keep most traders on the up and up. So, Jordan, what are your thoughts about those 3 rules?
I like number 3. I disagree with number 1 and 2. Now, the only reason I disagree with that, and I think this is where we're going to clash heads a little bit.
This is why I brought it up.
Yeah. You're trying to poke the bear. Look, we've got a running joke with David, equity trader, and obviously I'm an FX trader. When you're trading currencies, you got two assets trade against each other, and we are very range bound, right? We are just. You look at the percentage moves that we get over years. What are we doing, right? So when it comes to if it's going up, buy it. If it's going down, sell it. I think it relates more to equity. I think when you're pairing two assets against head to head and then trading those in FX pairs, there's a bit more to it than that personal point of view. Keeping your position size small, absolutely. Pick a size that you're happy with, half it. That's what I like to tell people. If they get overly emotional when trading, they're really struggling, pick a size you're comfortable with risk. Half it, trade with that. Make it boring. Make it boring.
So work out where you stand on those rules and make sure you're not trading like a moron. Jordan, always a pleasure. Let's finish up now. And in the very next episode that I know everybody will be waiting for, we have got a related topic. So I know you're going to want to watch that. Happy trading, Jordan.